In my life, I try and avoid things that are stupid. In the first place, it's stupid because it's very likely to go to zero.
Hey there folks, as always, welcome back to another exciting video. In this video, we'll talk about why Charlie Munger believes Bitcoin will go to zero. To go against BTC, Charlie Munger is one hell of a man, but he has opinions on Bitcoin which we'll discuss today. So make sure to stay tuned until the end. Charlie Munger is a supporter of communism. Berkshire Hathaway's vice chairman, who clearly supports free market capitalism when it helps him, seems to dismiss it when it doesn't. Allow us to explain. After investing $1 billion in a Brazilian digital bank with ties to cryptocurrency, Berkshire Hathaway's vice chairman Charlie Munger had some harsh words for Bitcoin and its ilk. "I didn't put any money into cryptocurrency. I'm proud of myself for avoiding that. It's almost like a venereal disease," Munger declared during the annual meeting of the publisher Daily Journal Corporation, wherein he serves as chairman, that "I just see it as beneath contempt." Munger, a 98-year-old billionaire investor, has previously slammed Bitcoin, calling it rat poison, and said on Wednesday that cryptocurrencies should be prohibited, adding that he admires the Chinese for banning it. Munger's critical views for Bitcoin contrast sharply with news on Wednesday that Berkshire Hathaway, the investment vehicle he co-manages with Warren Buffett, had invested $1 billion in Nubank, a Brazilian digital bank with a Bitcoin-friendly perspective. Berkshire first invested $500 million in the 8-year-old São Paulo-based bank in June of last year. It was a wise decision. Nubank's IPO in New York last December raised $2.6 billion, valuing the fintech company at almost $40 billion. Nubank has over 48 million customers in Brazil, Colombia, and Mexico, according to its prospectus. According to the firm, nearly 5 million people have received their first credit cards, expanding financial services to Latin America's unbanked population, which is expected to drop to 20% of the entire population in 2020 from 45% in 2017. Berkshire boosted its holding in Nubank by $1 billion in the fourth quarter of last year, seeing growth potential. A filing with the Securities and Exchange Commission revealed the investment fund's large bet on Nubank on Monday. Although Nubank's core business is credit and debit cards, it also runs New Invest, an investment platform that lets customers invest in a Bitcoin-backed, exchange-traded fund. However, the bank's crypto-friendly DNA may have been exaggerated. Nubank obtained its Bitcoin open investment platform in 2021 when it bought Easy Invest from Brazil and rebranded it as New Invest. In addition, the company's prospectus makes no mention of Bitcoin income or products. Nubank, which is currently losing money, solely counts transaction fees, card fees, and its financial instrument assets, which it describes as mainly an extremely liquid government bonds. The bank does not say that its future growth is contingent on its ability to keep pace with technological innovations such as virtual and cryptocurrency, but that comes with a qualifier. Cryptocurrencies and blockchain could restrict our ability to follow the transfer of cash and so create a risk to our organization, Nubank cautions, prohibiting the bank from undertaking due diligence on money laundering. Nonetheless, Berkshire's exposure to cryptocurrency has grown as more banks offer the service in the newfangled fintech industry through its investments in traditional banks. Munger may be dismayed to find that he hasn't managed to escape this sickness as effectively as he would want. Furthermore, as investors face the greatest inflation in decades, Warren Buffett and Charlie Munger has a simple tip for them: invest in your own skills. Anything that allows you to develop yourself is by far the finest investment. Buffett stated during Berkshire Hathaway's annual shareholder meeting in Omaha, Nebraska over the weekend, the first time the legendary finance event has been held in person since 2019. If you've liked what you've seen so far, make sure to subscribe. Whatever abilities you have can't be taken away from you if you're the one people choose to undertake any given activity. Sing, play basketball, be their lawyer, whatever it is. They can't inflate themselves away from you. Buffett, the 91-year-old investment giant known as the Oracle of Omaha, has spent years transforming a modest textile company into a conglomerate worth around $700 billion. That's $993 billion, with operation in insurance, transportation, and retail. His financial prowess has drawn a legion of followers who cling to his every word for nuggets of investment advice. Buffett utilized the more than 5-hour event to impart thoughts on investing and life, in addition to the standard annual meeting protocol and queries on Berkshire's businesses. At the meeting, Buffett and his longtime business partner Charlie Munger shared some of their opinions. So let's dive deeper. Buffett and Munger, both 98, have long been skeptics about cryptocurrencies, and they have continued to do so. When your friendly advisor recommends you put all your money into Bitcoin because you have your own retirement account, just say no, Munger added. Buffett noted that one of his main concerns with Bitcoin and other cryptocurrencies is that they aren't as productive as farms or other forms of real estate, leaving the billionaire investor unclear what to do with them. Munger was more direct. I strive to avoid dumb and wicked things in my life that make me look bad in relation to someone else, he stated. Bitcoin is capable of all three. In recent years, businesses and CEOs have been increasingly obliged to handle complex political concerns. While Buffett has supported political candidates and campaigned for Hillary Clinton, he has recently backed away from certain contentious themes. Buffett explained that there are few benefits to getting involved in controversy. When I take the job as CEO of Berkshire Hathaway, I don't place my citizenship in a blind trust, Buffett stated. But I've also learned that by speaking on any subject, you can make a lot more people permanently mad than you can get temporarily happy. And on certain subjects, they'll take it out on our company. While other investors might pursue alternative paths, Buffett sounded adamant about not allowing his own views to influence the more than 370,000 Berkshire employees. I've taken a step back, he stated. I don't want to say something that will be ascribed to Berkshire and then have someone else pay the price for what I say. Buffett and Munger were severe in their assessment of the present stock market, comparing it to a casino on several occasions. In the first quarter, Buffett suffered the pain of tumultuous markets. Due to changes in the company's $390 billion stock portfolios, net earnings decreased by more than 53%. Buffett, however, seems undeterred. Berkshire Hathaway purchased a net $41 billion in equities in the first 3 months of the year, the largest since records began in 2008. Markets do crazy things, and Berkshire gets an opportunity to do something every now and then, Buffett added. It isn't because we're intelligent, it's because the one qualification I claim for us is that we're both sane. And in this company, that's the most important necessity. Munger, for one, believes the market is lacking insanity. We now have virtually a craze of speculating, Munger stated. We have computers that trade algorithms with other computers. People with minimal knowledge of stocks are being counseled by stockbrokers with even less knowledge. Munger also predicted that Apple Incorporated, Alphabet Incorporated, and Microsoft Corporation, all of which are owned by Berkshire Hathaway, will be very strong in 50 years. He said he mistakenly assumed a half-century ago that this would also be true for newspapers, and bemoaned the loss of newspapers to media that give people only what they want to hear on all sides of the political spectrum. Walter Cronkite, and all the great newspapers of the past, Munger added, alluding to the renowned CBS News anchor. In 2020, Berkshire Hathaway sold its newspaper holdings to Lee Enterprises Incorporated. Although Charlie Munger labels Bitcoin wicked, he appears to believe that one of the world's most terrible institutions is ethical and virtuous enough to invest in. Make no mistake, if Munger knew how to make a lot of money with Bitcoin, he'd consider it just as morally justifiable as investing in Bank of America. Gary Gensler, the SEC chair, labeled the crypto market as the Wild Wild West in August and has subsequently shown a desire to regulate it. Munger expressed doubts about the government's willingness to regulate Bitcoin rigorously. The truth is that when our regulatory institution leaves the government, they go into heavy promotional capitalism, he claims. As a result, getting the government to make smart, wise decisions on something like Bitcoin is quite difficult. So that brings us to the end of today's video. Thanks for watching. If you enjoyed it, please like, share, and subscribe to our channel for more such great content.